Micron stock pulled back heavily today as we're seeing institutional and retail capital rotate out in anticipation of tomorrow's earnings. In today's video, I'm going to be highlighting why I think this is going to be a generational buying opportunity for Micron Technologies and why I am so bullish going into the remainder of 2026 and all the way till probably 2032 and even beyond that. Now, remember, as always, never financial advice, just trying to put you guys on the plays that I'm in. If you're new around here, smash the like button and also consider subscribing to the channel. Let's go ahead and jump right in, guys. So, Micron stock, what an absolutely insane rally it's been on basically all of 2026. Starting off the year, literally coming in at $280 a share and just surpassing $1,200 yesterday, followed by some pretty significant downturns. Let's pull up the one-day chart because we're going to be looking at the daily EMA. So if you're not familiar, I follow two technical indicators when I'm buying stocks. It is the 20, 50, 100, and 200-day EMA shown by these four lines, as well as the RSI. Anything above 70 is considered overbought. Anything below 30 is considered oversold. It makes it simple. It makes it easy. I don't have to get too fancy with technical analysis. If you want to utilize these tools, they're literally free with the description below. For TradingView, a great place to start. And then you can get fancy and get premium. They're going to offer you some things down in the description below. So Micron again entered a little bit of corrective territory, down 13% on the day. Remember, to be officially in correction mode, we need to go down 20% from all-time highs. We haven't hit that. And this red line, as long as we stay above it, we have the momentum and bull thesis intact. If it falls below, we could test the 50-day EMA, but I really don't foresee that happening, even if for whatever reason, earnings comes out bearish, which I just really do not foresee. Now, let's go ahead and talk about what happened in the market today and what to anticipate for tomorrow, June 24th. That is Q3 earnings for Micron. Micron falls as South Korea's lead memory sell-off raises earnings stakes. Micron's Anthropic agreement keeps the AI memory story in view, with earnings set to show whether HBM demand or high bandwidth memory demand, pricing, and margins can support expectations after the pullback. So per Motley Fool, we know that Micron Technology is an AI-focused memory storage chip maker. And it closed a little bit in corrective territory, down 13.18%. The stock fell sharply as South Korea-led memory chip sell-off hit SK Hynix, Samsung, spilling into US memory names ahead of Micron's June 24th earnings report. What does this all mean? Micron shares declined sharply after we saw what happened for the South Korean market. Just one day before Micron's fiscal third quarter earnings report. While the recent Anthropic agreement highlights continued demand for Micron's memory and storage products in the AI infrastructure, Tuesday's drop demonstrated how quickly market sentiment can shift after a major AI memory rally. Because remember, there's this theory that semiconductors, chips, AI, all of these different things, specifically when it comes to the chip sector and HBM or high bandwidth memory sector, they come in cyclical times. They have the cyclical nature where they'll run up during these bubble moments and then they will run down pretty heavily thereafter. The upcoming earnings, of course, is absolutely critical for all Micron holders, as investors will see confirmation that HBM demand, DRAM, and NAND or NAND pricing, gross margins, and fourth quarter guidance are strong enough to meet high expectations. Because remember, right now we have institutions that are betting that Micron Technologies can be a $1,750 stock by, or at least looking at a 12-month forecast perspective as of the month of May. So in the next 11 months, there are people putting money behind it. And I'm not talking just normal people, I'm talking 5-star Wall Street analysts that are backing that thesis and statement. The key question is whether Micron can convert AI infrastructure demand into sustained revenue and margin growth, given that the recent sector sell-off already reflected significant optimism in memory stock prices. So with that being said, again, what did I just mention? I don't want to just talk the talk. I want to also show you guys and walk the walk. Right now, the highest price target for Micron per 5-star analyst, this is per TipRanks, is $1,750 per share. $12.9680, 23% upside is what most of the analysts are projecting on average where Micron will be over the next 12-month forecast. With that, and this is what gets so interesting and why I do believe all that's happening right now is some fear, uncertainty, and doubt put in from a lot of these different institutions to bring down the price. Bank of America reaffirmed today during market hours, per one of their 5-star analysts, Vivek Arya, saying that there's a 42% upside and $1,500 price target. This is interesting because look what happened over on the sentiment side. Bank of America comes out today and basically FUDs or fear, uncertainty, and doubts all of the retail and institutional investors out there. Per Serenity over on X or Twitter, one of the biggest stock investor platform or social media platforms that are out there, stated the following: dip looks like a clear buying opportunity for me personally from Micron, Intel, and TSM or Taiwan Semiconductor. Since we got massive drop off some BS narratives that three rate hikes off no newly material macroeconomic data, which comes out Thursday, by the way, in 2 days. If institutions really believe 3 rate hikes sell side garbage that Bank of America put out, that would profit off of the CME prediction markets, which are still projecting 74% no rate hike in July, but they don't. So they're all feeding retail investors some garbage. Bank of America paid PGIM to spread 3 rate hike fear. Bloomberg released an article on the 15th of June with PGIM expecting 3 rate hikes this year. Now Bank of America is pushing that same narrative, and they're the same people that came out today saying that there's a $1,500 price target on Micron. So with that being said, if you ask my opinion, make it make sense. And all I see here is nothing but a generational buying opportunity. Now, what should we expect for market tomorrow, at least after hours, when Micron reports its earnings at 2:30 p.m. Eastern Standard Time? Or excuse me, 2:30 p.m. Central Standard, 3:30 p.m. Eastern Standard Time. So here's the expectations. Wall Street expects the revenue to be at $34.38 billion. The company guidance is anywhere between $33.5 billion plus or minus $750 million per their previous earnings report. The earnings per share or EPS is at $19.72 per Wall Street expectations, which is above the company guidance of $19.15. So with that being said, we have some high expectations to meet tomorrow, and I think each and every one of them will be met. AI-driven demand. A massive surge in growth is primarily fueled by AI build-out and severe shortage in high bandwidth memory supply. Micron has beaten its EPS estimates for consecutive quarters, and elevated investor expectations mean the focus would be highly centered around forward guidance for Q4 and into 2027. People are not going to care about what's happening now. We already know everything is sold out. There's high demand for HBM. High bandwidth memory is highly sought after for all these data center buildouts and the AI race. Market volatility is very interesting, with options market are pricing an implied volatility of 17 to 20% for the stock, meaning it could swing 17 to 20% upside or downside, but we're seeing a lot higher volume for upside swings than downside. So keep that in mind, meaning significant price swings are highly likely. The typical price to earnings ratio for tech sector, and something that we need to make sure we understand, is hovering between 28-36 multiplier. For hardware infrastructure and AI growth, 40 to 60x multipliers are commonly seen. For hardware infrastructure, 15 to 25x, and that's where Micron Technology sits. Micron Technology's forward PE is currently hovering around 10x, representing a significant discount compared to its trailing PE of roughly 53x. Because remember, Micron has grown parabolically, not just its chart. I know that this looks like it's a blow-off top chart, but you need to understand the revenue backs the fact that we're seeing this skyrocket of a chart. Now, the divergence reflects a massive anticipated earnings growth through the cyclical and AI-driven nature of memory demand makes investors debate, or though the cyclical and AI-driven nature of memory demand makes investors debate the true long-term valuation. So with that being said, what I'll tell you guys is Micron Technologies is no longer the company it was in 2025. It's no longer the company that it was ever, historically speaking. It's a brand new company that has a brand new total addressable market with a big, massive revenue potential over the coming years. With that being said, I could honestly see Micron Technologies becoming a $2,000, $3,000, $4,000 stock. And most likely, we might hear very soon that a stock split's going to happen. And every single time, without a doubt, when we see stock splits for these very big companies like Microsoft, Apple, Google, Amazon, you name it, Tesla, Every time we see stock splits, it allows more retail demand coming in, more institutional demand coming in, because people feel that they can gain more ownership in a company or stock by having whole shares instead of fractional shares. Because not a lot of people have $1,000 to throw at Micron Technologies right now. They feel like that's too much. But if you do a 4-to-1 stock split and make it $250 per share stock, more people will be attracted to that. Even though it doesn't change the market cap, it just makes people have this sense of ownership, right? So, with all that being said, I believe tomorrow's earnings is going to be extremely bullish. If we pull back to the 20-day EMA, this red line right here, $983 a share, that's my first strike price. If for whatever reason we get some kind of bearish reads after or during that forward guidance and during the earnings call, and we somehow enter into significant corrective territory at the 50-day EMA, at anywhere between these two, $981 and $809 a share, that is going to be my all-in. I'm throwing every single dollar I possibly can, and I will have some dry powder or cash waiting to go ahead and buy the dip during after hours trading. If you want to start trading after hours, by the way, you don't have to only trade during market open. There's a link down below for Webull. Get some free stocks, get 1 month free Webull premium when you deposit money into your account. $150,000 plus worth of value waiting for you down in the description below. Take advantage of it, guys. And remember, when there's fear in the market, that is the time to get greedy. When there's greed in the market, that is the time to get fearful and start peeling profits off the top. Right now, we're starting to sense there's fear entering, so that is the time to start buying. I appreciate your support. That's all I had. And until next time, as always, everybody, keep investing. Peace.